Got you. And I want to get really deep into that, but before we do, can you tell the audience in terms of how you came up with, even with the idea of Trifigo? Like, what was the thought process of you even coming up with this app?
So made a couple mistakes when I graduated undergrad myself a few years ago. Didn't fully understand credit. Had a couple credit cards. You were kind of given to me relatively easy, and making some money and wanted to ball out and live a certain lifestyle, which I did. The only thing I didn't do wrong was I never missed a payment. But most of the other stuff, credit utilizations, applying for a bunch of cards at the same time, hitting my credit inquiries, all of those small things, pulling my average age of credit down by opening new cards that I never used just because I wanted to have them, those kind of decisions jacked up my credit for a long time. Right. And so I kind of started looking at that a little bit later as I kind of got a little older and was like, this kind of credit score thing is a little important. Then I got into business school. So I got to Stern at NYU and, started kind of talking kind of informal conversations with my peers and, my non-minority peers. And we started just kind of talking about credit scores in general and to see what their credit scores were typically compared to, mine and others like me was a pretty big gap. We were one of the best business schools in the country. And there were still differences with the same student base. Right. So, and then talking to immigrants, because a huge percentage of NYU's student base, at least the business school, is international. So them cats didn't even have credit scores. So they had a whole set of other issues with access to capital. So, kind of going through that, then worked at the New York Fed in the last financial crisis in 2008. And I saw the devastation among certain communities, how that crisis impacted communities a lot more than others. So if you look at foreclosure rates and delinquencies kind of segmented around certain cities and neighborhoods, they look like me, right? And, there was prior to 2009, FICO and the agencies didn't have to actually tell you how they calculated your credit score. It's kind of like this hidden secret. Congress passed a law that made them have to kind of give you some guidance. But even with that, there hasn't been a lot of penetration in the minority community in this area. And especially minorities, especially kind of also the millennial, the younger kind of consumer. So those kind of two subsegments, it's like, all right, no one's kind of really doing anything around that huge, black and brown population. And I, have the knowledge for it, been to business school, worked at some of these major banks and various senior risk roles. Why don't I take that knowledge and actually do something? So I myself, I've made a lot of the mistakes, built my own credit score. I'm in that 800 club, so I'm sitting pretty good now.
Congratulations
So how do I,
to you.
you know what I mean? I'm bringing up like 10, 15.
Got them good interest rates.
Bruh, like my credit cards, bank is losing money, loaning me money right now. And I got all fixed rates. So that's another piece, another trick to the game. If you can on credit cards, always stick to fixed interest rates. Because that variable interest rate, even the intro, is a setup. Because that means you got to check LIBOR or whatever benchmark rate that is every 3 months, where they can change that interest rate on you. And 98, 99% of people will never check that benchmark interest rate.
Right.
And see where it's coming down at. Now the Fed just lowered basis points another 25, so you might get a little helping there on the 25 bips. But in general, it's going up. So if you sit with a fixed interest rate, you offset that risk to the bank versus yourself. They're locking in their spread when you take a variable interest rate card. That's all they do. They lock in their spread. And we can kind of talk about what spreads are in the future. But if they have a fixed rate, now you kind of offset to say at some point you're going to get a little bit, some point I'm going to get a little bit. In my case, I'm always winning. It's just my card. But you know what I mean? So those are some of the things that kind of why I started to look at, knowing the problem that's out there, knowing anecdotally that I had a lot of friends that had terrible credit scores. Myself, I was in a bad credit score spot for a while. What are we doing to fix that? And I'm not relying on somebody else to come fix a problem that I have the capacity for and the passion to kind of work with and seeing that the numbers are still there. So I started this company in 2017, but I've had this kind of thought process in my head for a couple of years. And I looked at different iterations of it to really think about how do you help a set of people empower themselves,
Right.
right? So there's a bunch of different ways to it. Like credit, again, is not the end all be all, but it's like building a house. You need a solid foundation. And what credit usually does is it actually teaches you discipline, because that's really what credit's going to do. So that discipline in terms of understanding, cash flows and expenses, and not going splurging and balling out even when you can, and making smart decisions and like, hey, if I put down my utilization, and I'm cut down from 11 to 9%, knowing the game, that 10% marker is a threshold. That bumps my credit score a couple more points up because I'm below that 10% threshold.